we need to talk about the absolute boogeyman of the economy, and that would be gas prices. See, here's the reality. Like it or not, our entire economy is dictated by the price of oil. And even though that sounds dramatic, the more oil goes up, the more expensive everything else becomes. Like, think of it this way. Your groceries, your Amazon packages, the plane you fly on, the fertilizer that grows food, every single one of those items used oil. And if that sounds impossible, remember, trucks run on diesel, ships run on fuel, farms use oil-based products, plastics are made from petroleum, manufacturing uses energy. So when the price of oil goes up, literally everything else rises alongside with it. In fact, according to Federal Reserve research, a 10% increase in the price of oil raises the energy CPI by roughly 1.5% immediately. And then what happens from there? Well, it's a chain reaction because businesses see their margins squeezed, so they have to raise prices. Consumers then spend more, which leaves them with less money left over for everything else. And as this continues, inflation returns and everything goes to Okay, here's the biggest concern. As of a few days ago, it was reported that February's inflation came in at 2.4%. Except, this measured a time before oil prices saw their largest increase since 2022. And if oil remains above $100 a barrel, we could soon see inflation hit 3.5% faster than a lot of people expect. For example, the national average for a gallon of gas jumped from $2.81 in January to $3.21 last week to $3.53 this week, which is a 10% increase in just 7 days. And if this trend continues, analysts warn that our current oil closure could become 3 times the severity of the Arab oil embargo of the 1970s, when the markets fell almost 45%. This is why the Federal Reserve is really in an impossible position, because on the one hand, the job market is softening, the economy is weakening, and personal savings is declining, which would benefit from lower rates. But on the other hand, oil is surging, prices are rising, and inflation might quickly return, which would require the Federal Reserve to raise interest rates so that everything doesn't get out of control. Essentially, this is the latest stagflation crisis that so many people were worried about. This occurs when inflation remains high during a time that unemployment increases, and current conditions could be the perfect storm for this to actually take place. So what does this mean for the stock market? Here's what's funny. A few months ago, I mentioned how interesting it was that not a single analyst forecasted that the stock market would end the year negative.